Thank you, everybody, for showing up and being here on this educational webinar. We're running these like every Thursday at noon Pacific, and this is another one we're adding to our library of stuff. This is a good one. I like it, and I hope you will too. Appreciate y'all showing up. My name is Dave Jones. I'm a brokerage manager here at Penny Insurance Center. I'm coming up on 5 years here at Penny. I've been in the industry coming up on 30 years. Hate to admit it, but it is true. And so what this is about, the topic here, how top agents position term, whole life, and IUL without confusing clients. Uh, to present what the challenge is, that's basically it. That's a lot of information, man. If anybody has looked at the life insurance uh, bunch of information that you could put out there, all the different options, it can be intimidating and overwhelming even to an agent. And so a lot of times you're talking to your client, a consumer, and you're trying to navigate through all that and have them go through it too, and have them follow you through this maze of information, and it gets to be honestly too much. It's an approach where I want to flip it so that you do your sales presentation in a way that identifies particular types of policies, products, and even carriers that will fit your client's needs. And that way, rather than show them the whole gamut of options and then have them try to choose, you're just drawing from the whole bunch of information that you're aware of and showing them what's relevant to their situation. They'll appreciate you. You'll appreciate it too, for sure, because it's way easier that way. As I say, if you do it the other way around, it is bass backwards, and we don't want to be that. So we'll flip it. Real quick, want to do some shameless self-promotion. Uh, these are our seminars, our webinars that we have ready to view for any of you. You got your URL here. You guys can check it out. Chris put together a great landing page, and there are some recorded there that you can access anytime on demand. I did one on IULs. Keelan did one on Life Insurance 101. Charles the King did one on company-owned or corporate-owned life insurance, and Chad did one on term versus permanent. There's others there. I just put up a handful that you can choose from. Please knock yourself out, get in there and take a look at it anytime. We're proud of how it's turning out. And so far we've been getting a lot of good feedback on it. This one right here just happens to be a new one that'll be up there right after today. So how do you go about looking at an entire library of information and steering your client to the particular product or couple products that will make sense to them? First off, I'm going to just go over the products themselves, IUL term and whole life. I know it's kind of rudimentary. I know this is kind of Life Insurance 101. Bear with me. We've got lots of agents here that may be new, maybe PNC agents or Medicare agents, and life just isn't their primary thing, so to speak. So it's good to know these things. Some of you will say, hey, I know all this already. Good. Bear with me for a minute. We'll go over some things because you want to know products first to know what you're drawing from. So term, what's the purpose of term? It covers, it protects for a specific period of time. Commonly, it's going to be 10, 20, 30 years. A lot of carriers out there will do 5-year increments. Corebridge even does 1-year increments for anybody who has some one-off thing where they need 18 years worth of coverage or whatever. You can do that. Potential customers, clients on a tight budget. That's a lot of customers. Need coverage for to secure a loan. So business owners, they get a business loan, small business loan, and then they find out that not only do they have to qualify for the loan, contingent upon that, it sometimes is having life insurance to cover just in case something were to happen. And then they're scrambling, calling you, looking for life insurance. We can do that. Homeowners needing mortgage protection. Used to be people did the traditional mortgage protection kind of thing, which is a decreasing term. Not a big fan because rates are so good now. Why not get a level term? You get a 30-year term that covers the balance of your mortgage. As you pay down that mortgage, more and more money is left for your beneficiaries. It's a great deal. It's the way to go. Cost, I just touched on it. Term provides the best bang for the buck, for sure. Most coverage dollars for the lowest premium dollars. I like that equation, and so will your clients. Rates are at all-time lows. That's a fact. As they get adjusted, they keep getting adjusted downward. So keep saying that until it's untrue. I don't see that happening soon. It keeps getting better and better. They're in competition with one another, the carriers. So you can always honestly tell your clients that rates for term products are at all-time lows. And don't be surprised when your clients are surprised at how affordable it is. It's really common for them to come into a session with you, just, okay, I want to shop life insurance. I need X number of dollars. And you show them the rates and they go, oh, wow, I thought it was going to cost a lot more than that. Potential to make more sales, add on a spouse, family members, whomever, for that same budget that they thought that they were going to be spending to begin with. What's guaranteed about them? Well, it's a level premium. So if you get a 30-year term, regardless of what it's intended to cover, it's going to stay the same premium. It's going to stay the same death benefit the entire 30 years or whatever the term happens to be. It's guaranteed renewable. Renewable means that at the end of that term, whether it's 30 years or whatever the term is, they'll renew it, guaranteed. It's not ideal. It's not something situation you want to put yourself in, but it is something that is crucial in particular situations. I can tell you it's not uncommon for an insured, your client, to go through their term and it's on an EFT, automatic draw, so it's getting paid and they don't notice it. They go into, say, year 31 or year 21 on a 20-year term, whatever it is, and so they're on renewals, and they just kind of don't notice it. Rates go up. It becomes an ART, that's an annual renewable term. Fact of the matter is, they can tolerate that usually and maybe not notice it for the first year. By the second year or so, they're going to notice that your phone's going to be ringing. So keep on top of things. If you can be preemptive in that and contact them before they get into ARTs, you'll be their hero and write them a new policy before they get shocked at their statements. And it's guaranteed convertible. And that means that at least during particular times throughout the term of the policy, you can convert it to a permanent policy, permanent coverage. Usually there's more options in the first 10 years of the term, and then it's still convertible all the way up to age 65 or even 70 with some carriers. It's a good option especially for particular circumstances. Along the way, maybe somebody has health issues, maybe they wouldn't qualify for additional coverage at the end of the term and they still need it. They can convert this to permanent. And I know this is general life insurance 101. What it's not. Permanent? Well, no, not unless it's converted. So yeah, you can convert it, but not typically. It's just for a particular amount of time. Source of cash value? Not at all. It doesn't have a cash value accumulation to it whatsoever. It's just the death benefit is what it's for. Is it complicated? Nope. It's really straightforward. That's a good sales point. Easy. If somebody has a $1 million loan to cover and they need a 10-year term, boom. Problem solved. Whole life. That, just like it sounds, is for the whole life, provides lifelong protection. There is a potential for cash value. It accumulates cash value. Some even have dividends that pay into it. Mutual companies like Mass Mutual, for instance. Premiums are much higher than term for obvious reasons, but it is appropriate for specific situations. Estate planning for high net worth individuals. That individual who has already talked to their financial advisor and they're told they should get this for estate planning, if they call you, that's a great call to get. That's a really good policy you're going to be writing. Final expense, that's the senior market. If they just need something for funeral expenses, it's up to $25,000. It can be guaranteed issue if necessary. Those are really common if you are a Medicare agent, for example, out there. Absolutely compartmentalized properly. don't do a sales call at the same time you're doing Medicare, but you're going to have a excuse me, a demographic there that they're going to want final expense, or at least you're going to get a lot of inquiries about final expense and child policies, juvenile policies, because grandparents love to buy a life insurance policy for their grandkids. And grandkids love getting that for Christmas. It's a great present, but they'll get it. And so you'll see those inquiries come in and you can address those. IUL. That's the third product in this whole mix of things, and that's the one that's the most complicated of the three. But we're here to simplify things. It's permanent coverage. It provides protection that's intended to last the entire life. Usually an illustration has 3 columns to it. Guaranteed column, which is everything, a perfect storm of terribleness happens throughout the whole policy, and you don't do anything about it, you don't act on it or change things up, it will still run out to a particular time, usually up to age 85 you can run it, so it's still fairly safe. There's a middle column for very conservative illustration and projections, and then there's the right hand column, which is not guaranteed, but it's no longer pie in the sky. They regulate against that. Not supposed to be giving them, oh, it's going to do 10-12% every year for the next 30 years or whatever. That's just not realistic. So it's more based on historical performance. So it's not out of the question as far as something you should look at, and it's reasonable expectations, a lot more than it used to be for sure. It is tied to but not invested in, that's a key point, tied to but not invested in the performance of a chosen market index. So you don't need securities license to sell these because they're not truly invested. You're not even supposed to say the word investment when you're talking about these, but to a certain extent, at least they will mirror the performance of the chosen index. But like I say, to a certain extent, it has caps and floors. Which means that if the index, S&P 500 high cap index, for instance, if you're tied to that one, then if it goes up 20%, probably going to cap out at 10 to 12%, depending on whichever product you have. So you don't take the ride all the way up to the top floor, but that's okay, because if it tanks 10, 20, 30%, who knows how much, 2008, then you don't take that ride down to the basement either. So zero is your hero, as they say. Somebody who has their money invested, well, not invested, but put into an IUL, they're not losing all that money if and when the market tanks, which happens here and there. Can have living benefits. So long-term care, chronic illness benefit, critical benefits, and it's accelerated death benefits, so that you have access to your death benefit without having to die. It's a good point. So living, if one of these things comes up, that you have a chronic illness or a critical illness, and there's other riders you can put to it where you have access to those dollars when needed. Very good benefit to have, not to mention the fact that you have a cash value accumulation aspect to the whole policy that you can access to when that starts accumulating. And tax-free income. If it's structured properly, you can count on tax-free income in your retirement. That's what these are typically used for. And that's a whole other presentation that we've done and can do again. And you can take a look at or talk to me about, where you put money into it and overfund it for 20 years or whatever it is, 20, 30 years, and then you stop paying at it when you turn 65 and you retire, and you start taking the money out as a supplement to your retirement income, tax-free as a participating loan. It's very nice, and your clients will love it. I love showing people that strategy, and it's very, very powerful, especially these days when no one has a pension or 401k anymore, it seems. Okay, when do I present these things? It's still somewhat confusing. I know there's a lot of stuff out there, and that's just 3 options, right? That's just 3 different products. Well, generally speaking, there's no one answer to everything. This is generally, so you can keep things in a lane and keep your clients in a lane. Term is for business owners in need of coverage to secure loans. A young couple that just purchased a home, somebody who just had a kid and has a new family, just got married, what have you. those kinds of things. The it You can go all the way up to 30 years, and there's a couple carriers that go beyond 30 years now. You can get up to 40 years on a term. So very, very cost effective. It's inexpensive, very, very affordable stuff. That's the way to go. Whole life. Who wants that? I think we talked about it a little bit already. Seniors in need of final expense coverage. Maybe they don't have any debt. They don't have much income to speak of. Nobody's reliant on them for income, so they just need the funeral expenses covered. Parents and grandparents, they do it for juveniles. Like I said, that whole life policy, it can be used to fund for college or just as a gifting thing, legacy thing. Um, Pretty common. And the high net worth client for estate planning. Those are the good ones. Those are exciting and fun, and good for you for getting those as they come in the door, or call you on your phone. That's a good thing. And then IULs, they can be used for college funding for kids too, but generally clients in their 30s to 50s planning for retirement, like I was talking about, that retirement income that you can put into it. Clients seeking tax-free income in retirement. They may not know about that, but if they're looking for anything as far as retirement planning, you can bring that aspect up to them and show them how it works. And again, powerful presentation to give your clients. And anyone wanting upside potential with downside protection. They take the elevator ride up at least to a certain extent and don't take it down all the way to the basement. Okay, determining who's who so you can show them what's what. So this is the strategy in the sales process. We're very big on a needs analysis, needs-based sales process here at Penny. That way you talk to your client, you learn about them, you ask open-ended questions, you determine things, all kinds of things about them and their lifestyle, so that then you can take all that information and go, aha, out of the huge library of products and things that I have available, here's one or two as viable solutions for you. They'll appreciate that, even if they don't know how many things you're picking it from. There's a bunch. So the discovery conversation, you want to know about their family structure. You want to know about their ages, financial dependency periods. How long are their kids going to be relying on their income? How long is their spouse going to be relying on their income? How long are they going to have a viable income to be made? If they're 35, it's probably going to be about 30 years to retirement. Health and lifestyle factors. Are you a helicopter medevac pilot? Do you jump out of planes? Hopefully with a parachute, crazy things like that. Do you travel a lot? All these things matter. Goals, intentions, and budget. This is that discovery conversation where you ask a bunch of open-ended questions to get the information you need to help your client. And then conduct a needs analysis. You may have heard this acronym DIME, D-I-M-E. It's, you want to find out about their debt. You want to find out about what type of income needs to be replaced. Again, what's their annual income? How long are they planning on earning that? And when are they going to retire? Their mortgage debt, that's a huge thing, especially here in California. I will point out, but it's anywhere, that's probably the biggest debt that most people take on, and it needs to be covered, so they're passing along a home to their loved ones rather than a mortgage debt. And then education for kids, that's a big thing too. It's in the news all over the place how expensive it is for college and how tough it is for the kids and for the parents to afford such a thing. You can put money aside for such things. It's something to take into account. And then you provide solutions. Based on all that information that you got through your discovery conversation and through your needs analysis, match your solution to your client's needs. And that way they don't have to weed through all that stuff that you know about in the background. You're just showing them the things that are relevant to their particular situation. Term, short and medium term protection, permanent for long-term protection and wealth planning, and then possibly a blend of both. That could be the best option. And present your solutions. This says a three-tier kind of a presentation, present good, better, and best. It's very, very popular to do that. Option 1, 2, or 3. Used to always do bronze, silver, and gold. That's a good way to present it. Everybody understands that. I also like to do just 2 options. If you can keep it even simpler than keeping it simple, why not? Give them 2 options, gold and platinum, whatever you want to do. But a basic term policy would be a bronze presentation. Silver, basic permanent policy for lifelong protection, and then gold might be that blended approach that I touched on a little bit there. Maybe a large term policy to take care of any income replacement, and then couple that, layer it, ladder it with a permanent coverage for lifelong needs, whether that's a smaller whole life policy or even maybe a GUL, guaranteed universal life. And that approach works really well. I could get into it more, but basically they run concurrent until the term falls off and that permanent keeps going for the rest of their life into retirement, and they're still paying the rates of whenever they got the policy, maybe a 35-year-old, whatever it is, and the rates will be better and better every year. Our Insurio CRM. If you contract with Penny Insurance Center, we will certainly be offering you and encouraging that you take on our CRM, Insurio. We have different levels of it, different types of platforms of it, different costs, all the way down to our Easy Life platform, which is at no cost. But it does everything. This is a CRM that was built specifically for life insurance sales. Okay, so anybody who is into life insurance looks at it and it's intuitive, it's user friendly for them, it's natural, it's easy. It is not the typical CRM that is for sales in general, selling widgets or anything else, and then you've got to work around and tweak and do everything, adjust it to make it fit your life insurance needs. Nope. This one we purchased ages ago. Stripped it down. It was a different CRM. We stripped it down to the bare bones and then rebuilt it specifically for life insurance. So you can track your leads and events and tasks and stay on task. You can manage your activities and minimize, hopefully eliminate non-revenue generating activities. You don't want too many of those. And we have a drop ticket in there that offers proactive case management, approval automation, and e-policy delivery. Our drop ticket is universal for all the 40 plus different carriers that are baked into the CRM that you can get quotes for. And it's the same one regardless of the carrier. So it's really easy to use it and to submit applications. Agents love it because it's the same every time. It's super easy. After this second or third time, you'll know exactly how to do it. It's really very nice. And automate marketing and sales functions, implement lead nurture campaigns, and status-driven follow-ups with a click. So it'll tell you what to do every day. It'll list out your tasks as to what to do, who to call, and stuff is automated behind the scenes. Emails are going out and reminders are coming up for you. It's a no-brainer, foolproof. I'm proof. And it facilitates this very process that we're talking about right now. Our integrated quoting and application path that is built into Insurio provides the framework for the needs-based sales approach we've been discussing here today. Ask the right questions in the right manner, in the right order, to effectively elicit the information you need to provide your clients the best solutions. Proven one call close. And I say that because it's true. Our internal sales team, our reps, use Insurio each day, every day, all day to talk to clients over the phone that may have just said, I need a quote, or I want to just ask about life insurance. And from that very, very general inquiry, it ends up at, let's get an application started for you. And it's designed to do that. It works. I've done it too, lots of times. All right, pro tips. Pro tips, no charge. Here we go. So, boom, let's do this one. So create and maximize potential sales opportunities. Always be looking for those things. Once you see them, jump all over them. Once you don't see them, create them. Once you create them, maximize them. If you are a PNC agent primarily, keep in mind, even write yourself a note to bring up the life insurance question. If you just sold somebody home or auto coverage, especially home, you kind of know that person may have just taken on a big debt in the form of a mortgage. They probably need life insurance. Um, you probably know a lot about them. They're your clients. It may be in your book of business. You know about their family and whatnot. Ask, now that we've taken care of your home and auto, what are you doing for life insurance? And again, subtle thing there. That's an open-ended question. It's not, do you have life insurance? Because that could end the conversation quickly. They could say, nope. And then you've got to try to get them going again in the conversation. If you ask, what are you doing about life insurance or for life insurance? They'll start spilling the beans and telling you all kinds of stuff. And a lot of it will be very good information for you. Annual policy reviews. First of all, do them. It's like I say, if somebody's coming up to the end of their term and all kinds of things like that, it's always good to do these things and to just go over and keep in touch with your clients and identify life events. Things change. Are they getting married, remarried, whatever the case may be? Do they have kids or new kids? Did they buy a new house? Did they sell a house? Do they have a new job? Has their income changed? Are their kids going to college now? Have they graduated from college? All kinds of things that you can identify in this process and offer a needs analysis or a review of life insurance, even if the initial policy wasn't life insurance. One thing you might want to do here and there is throw out a quote. I'm not a big fan of throwing out quotes without any information up front, but the fact is, again, if you're doing a policy review or you're familiar with this client in any way, or even if they're talking to you about another type of a policy, homeowners or whatever it may be, you can bring up the topic. I ran a quote and I try to do it just recently, so it's current, and say you can ask my quote, not Mark Twain's. Did you know that a 35-year-old couple, could get life insurance for as little as $25 per month? And then see what they say, see if that piques their interest, see if it starts the conversation. Fact of the matter is that's a 30-year term at 100,000 at preferred best rates for two people. Um, I mentioned rates are at all-time lows, man, and they really are. And so you can deliver on that and then get into their specific situation just by bringing up the conversation and then drill down on the needs and discovery and all those things. Pro tip, what are we on? Number 3, something like that. What is the first rule of sales? Just in general, and especially specifically on this topic, because we have so many different things that are available to us, and it's could be so confusing, especially to the average consumer. And you guys probably know the very first rule of sales is keep it simple, silly, stupid, whatever word you want to put in there. This is the way I was taught from early on. My mentor asked me one time if I knew what KISS was. I was wrong. He told me, let's keep it simple, stupid. So remember, it's the first rule of sales. Avoid industry jargon and complexity. We can make this as complex and secretive and interesting, I guess, if you want. If you're talking to a colleague or somebody else, GULs and JIT and ART and anything else you want to throw in there. And no one will know what you're talking about except somebody who's in the industry. So remember your audience. You're talking to the general consumer and your client that you care about. Respect your client's time. Uh, Easy to make it a quick process and an efficient process if you go through it with this strategy and not just throw the whole kitchen sink at them and then try to explain it and start narrowing it down from there. It gets really confusing. They'll say, I'll get back to you after I think about it. If you do it that way, that's bass backwards. Listen and focus on needs, on their needs. Sometimes you got to ask the open-ended question, and then you sit there and you quietly listen, and you will get all kinds of information, and you'll get a trust from your client, and you'll have a connection. You'll get to know them better. They'll get to know and trust you better. It's a really good thing just to listen to what they have to tell you, and then ask another open-ended question, and be quiet and listen for a little while and start taking some notes, and then address their needs and offer simple solutions. Simplify those solutions and relate them to those needs and budget and all those things that you just discovered through your conversation to them. Super effective sales strategy. I really like this. Again, we promote this heavily. This is the way I feel it should be done, and it's way too common for agents to throw the whole kitchen sink at people and expect them to be able to weed through it. So I hope you take something out of this. In summary, we always like to say, go out and protect. That's what our job is. We want to be trusted advisors, and we want to be able to protect our clients, which sometimes is our own family. And think of it that way. You're protecting people as though it's your own family. We at Penny are not just a data resource for information. We're a full service brokerage general agency. Never hesitate to broach the topic of life insurance with their clients, even if you don't happen to be a life insurance agent. Know that you have your very own expert life insurance division right behind you, eager to help. That's us. There's no need for your clients to shop anywhere else. A lot of times people think they need 3 quotes, like they're doing a fence or a roof or something. They don't. You're looking at 60 plus of the top rated carriers around the country, and you're providing them the best solution for their particular situation, and be confident that you have the resources necessary to do just that. Our team. This is our brokerage team, the ones you would primarily be working with. There's a bunch of people beyond this, of course. The guy on the left, that's me. Again, 30 years in the industry, and I love talking to my agents and helping them out and providing some solutions for them, or just supporting them in what they do, because sometimes they're very experienced and know stuff that I didn't even consider, and so I learned from them as well. Keelan Johnson. He is my boss. He is the brokerage sales manager here, and he's a good old boy from Texas. If you want to endear yourself to him, throw up hook 'em horns once in a while, maybe. And he's a good guy. 25 years plus experience, I believe, if I'm not mistaken. And he'll be happy to help you out too. And Chad is in Southern California, 20 years experience, ex-military, good guy, knows his stuff, and fairly new to the Penny team, but he'll be around for a long time. And then Charles, the King, King Charles, he's our resident RIA. So he's a registered investment advisor. So he's the, I think, the one with the least amount of experience amongst us, but it's still well over 10 years. And in that 10 years, he somehow learned probably 30 years worth of stuff. Great guy, knows his stuff for the advanced markets and high net worth individuals, things like that. Like I say, on this page, believe it or not, over 80 years of combined experience, and we're happy to help. And that's it. Want to thank you all again for showing up. Hey, we didn't do too bad. Little over 30 minutes maybe, but pretty close to being on target.
We have a few questions that came in, David.
Okay.
So the first question is, how do I get illustrations for my client?
We have an internal wholesaler here, so there's a couple different ways, but the easiest way is Paulette, who is our resident internal wholesaler, and you send a request to her, you send it to me, and I can pass it along, or even I can run them. Your brokerage manager can run illustrations, and she's more than happy to use her resources, which include WinFlex, Insight, and other platforms to run illustrations for you.
And the next question is, can I hand off a client to you to sell?
Generally speaking, no. Here's my role, and I want to make this clear because it's a support role. I'm here to support my agents and get them up and running on the sales process. If you aren't comfortable with it, Part of my job is to get you comfortable with it and get you confident in doing it. And I love doing that. And eventually you want to be there anyway, so that you can speak directly to your clients and not hand them off to somebody like me behind the scenes. However, we do have a referral program. So if you're at that point where maybe you are comfortable with it, but you're on vacation, or maybe you're just not ready to do it, and somebody hits you with a request that you weren't ready to handle, we've got our referral program. You can submit it to us. We've got our internal sales team. They will do everything from soup to nuts, just the sales process, the discovery conversation, the needs analysis, the presentation. And once it goes in force, if we put a policy in force, you'll get a 50-50 split on your normal commission without having to do anything. And so that's uh, a great way to go about it. In the meantime, you always have sessions with me so that I can get you up to speed so you can do the sales. And once in a while, I can sit in on a call too, but I'm not going to do the direct sales to the consumer.
And this is a great question. What other products do we offer?
We offer all things life, life-centric stuff. So disability insurance, long-term care, hybrids, which is a great solution to long-term care, annuities. And again, like I say, we've got Charles King, uh, investment advisor, who can take on any and all things. If somebody brings something up to you, more often than not, we can do it. Just had an interesting client that came our way for financing, premium finance. And so we're working on that. Whatever you got, as long as it has something to do remotely with life insurance, we could probably help you out.
I believe those are all the questions. Any final thoughts, David?
No, and this one, I know I focused on those main three products. Certainly not the only ones we do. It's just those are the most common, most popular ones you're going to be faced with, and even those can be a myriad of different choices and options. Don't confuse your client. Don't confuse yourself. Get the information first and then deliver the goods.
All right. Well, thank you for joining us, everyone. And as David mentioned, we're doing an educational series. It'll be 12 p.m. PST every Thursday. So make sure you tune in. And thanks so much, David.
Thank you guys. See ya.